Hello, this is Cynthia Fick, and this is your Tuesday stock market update. Well, last week I ended by saying that there was a bit of positive news about the stock market. And the surprising, kind of shocking thing is that after I said that on later in the week, the market came on really strong. It's really surprising. I'm going to show you some charts that are, in my opinion, shocking on how strong the stock market has been lately. The stock market is trying to flip from a primary downtrend that it's been in to a primary uptrend. And the key phrase in that is trying, because that means that, the probabilities are that, it could be successful, it could fail, but the probabilities have gotten a lot stronger. And I will share that with you right now. Let's look at the charts. First, the Dow Jones Industrial Average. So this is way, going way on back to 1994 and showing you in 2001, 2008, when we had our big drawdowns. And if you see, this is the moving average. And you can see that in 2001, we spent a lot of time below that moving average before we finally started, with a sustainable rally. In 2008, we dropped below, and it took a very long time for us to recover. But if you look in 2020 and 2022, you can see that we spent very little time below the moving average. And look, believe it or not, it's kind of shocking actually that we spent so little time below the moving average for the Dow Jones. So that's the Dow Jones. And looks, we broke the downward trend we had going on in 2022. And seem to be in trouble this year with the Silicon Valley Bank issues, but regaining strength. So let's look at the S&P 500. This is interesting also. These are a bunch of different moving averages, but what's really important here is that, look at that. That was the last 2 days of last week, how we just kind of broke through that resistance right there. And we're coming up on the old high, which again is very important. It's at about the 4,200 range on the S&P 500. If we can break above that at some point, doesn't have to be this week, because sometimes when the market does a big surge like that, it has to do a little resting, and that's okay. So at some point, if we can break through the 4,200 level on the S&P 500, things are looking a lot better. There's all the moving averages converged right here, which is key. When a market breaks out of that, usually means a big move is coming on the upside or the downside. Last time that happened was around here, and look, the market, continued to go down. Last time it happened to the upside is going back into 2020, and we know what happened there. All the moving averages kind of converged here, and then we had a pretty nice run in the market. So that's the S&P 500. Let's look at the NASDAQ, which is really interesting also. So this goes back to, way on back, and looks at, our big declines in the NASDAQ 100, the top 100 stocks in the NASDAQ, Facebook, Apple, Netflix, Google, Tesla, Oracle, all those kind of stocks. So we see what happened, big drawdown. And finally, this momentum actually broke above the zero line. And that was kind of off to the races there. In 2008, same thing happened. We broke above that momentum line and off to the races there. And here we are again, spent very little time underneath that moving average. It is a lot tighter. And here we are right at that momentum line again. So time will tell. But, again, the probabilities that something good could happen in the market, it's gotten a lot stronger right now. I'm patiently waiting, surprised, shocked, and hope that good things are on the horizon. But I will stay on top of it and let you know, and I will be talking to you next Tuesday. Have a great week. Bye.